It does happen from time to time. If you remember this time last year, Q4 2022 to Q1 2023, we had double-digit outperformance of Europe versus US. From our analysis, we see three drivers for Europe to outperform US. Number one, when you see economic surprise difference between Europe and US, that tends to correlate well between Europe and US equity outperformance. So middle of this year, outlook and sentiment for European economy was quite poor. Things are getting less bad right now. While
Are they?
Kind of, right? Like if you look at PMIs, they seems to have troughed. They are rebounding a bit. We think that continues to next year. Not a super strong growth outlook, but nonetheless, coming out of a recession to more flattish from 0%.
Ankit, I'll stop you there. I don't want to interrupt, but we haven't even got to the recession yet in large parts of Europe. Admittedly, we're skirting into mild recession in Germany. How can we come out of recession if we haven't got there yet? Is your optimism jumping a stage?
PMIs in mid-40s is recessionary, right? Like when you look at PMIs historically, that's very poor sentiment. We heard about destocking cycle happening in Europe right now, and it hasn't felt good. And when you look at fund flows out of Europe, we have had more than 40 weeks of outflows from European equities, which is in line with what you expect in a sluggish growth environment. We heard the word stagflation many times this year associated with Europe. So we do feel that things are getting less bad, and that will continue into next year. In the US, probably things are getting less good. Q3 was fantastic, but we don't expect that performance to continue into 2024.
To go with your theory around Europe outperforming the US next year, and I can hear you because in certain months I've been tracking the European performance, and there have been even surprising months this year where there has been an outperformance versus, say, the S&P 500 on some of the individual indices, but not all of them. So my question is, do you have to be very specific? For instance, that French stocks have done this before, German stocks too, and Italian names have been supported if you look at the index level. So how do you think about chasing that outperformance? Because it clearly doesn't look like it'll be the FTSE 100, for instance.
Yeah, we're looking at Euro Stocks 50 rather than FTSE 100. I think individual country indices have a lot of sector biases, and we like to position via large cap most wide index possible in Europe. And FTSE Euro Stocks 50 is liquid and scalable, so we like it from that perspective.
I can see banks too in one of your calls here.
Yeah.
Just charted banks so far this year. You get a journey if you're investing in the banks. I mean, the rapid acceleration in January was a very significant slope, huge plunge. I mean, not something you'd really want to ski as an intermediate skier. And then you've gone right back up again, down and up, and right back up again. So you've had pretty much everything over the bank's chart for this year. Does next year look any different?
I think next year should be, again, if you are in an environment where PMIs are weak, you're worried about growth, then in that environment, banks don't outperform. But that said, banks did outperform this year. Even though we had a bumpy ride, Q1 was fantastic, but then this is one of the sectors.
It wasn't bumpy, it was a roller coaster.
It was a roller coaster, fair enough. But this is one of the sectors in Europe for the past 3 years has delivered on positive earnings revision, which many other sectors have not done so consistently. And we expect that to continue next year. Strong earnings momentum, double-digit returns to shareholder with high dividend yield, buybacks. We think this is a sector that you want to own in equity market where you have earnings and good dividends.